Well, for more on JPMorgan's earnings, I want to bring in a top-rated analyst on the stock, according to Bloomberg data. He's David George, joining us now by phone. David, good for you to make some time for us on JP results. We've been calling it mixed. Are you more positive on these results?
I think on balance, the numbers were a little bit better than what we were looking for. The reported number of $1.09 was considerably better than both our number and the consensus, but there were some one-time items such as 17 cents of securities gains, 36 cents of loan loss reserve release, and some bonus tax impact in the UK. So the core number was generally in line with, I think, what we were looking for, and I think that was kind of the net of it all.
What do you make of the reduction in the loan loss reserves, though?
Well, I think it's reflective of improving credit quality really across the board. JPMorgan has been, I think, more aggressive than a lot of their peers in building reserves coming into this downturn, building capital, and I think this is just a reflection of consumer credit trends showing incremental improvement, and I think you probably expect this to continue as we go through the rest of the year.
Does it raise any concerns, though, if we do see a double dip or a further downturn in the economy?
Potentially. We're not in the double dip camp, Betty, but again, these guys still have over a 5% loan loss reserve, which is the best in the industry. So also very good capital levels. So not a huge concern from our perspective.
Capital levels. I'm glad you brought that up. Do they have enough capital right now? Or are they holding on too much of it?
Well, we'd love to get some kind of clarity from the regulators as it relates to what kind of capital levels the large systemic banks need to keep. JPMorgan's Tier 1 common ratio, which is kind of the metric we all consider, is the best in the industry at 9.6%. So they have, in our view, more than adequate capital, and probably as much as 10 to 20 billion in actually excess capital. So
then, would you want them to start deploying it more in the second half, or how long are you going to be patient about that?
Well, we're obviously going to be patient. I think there's some issues that are not completely under their control. Right. We need to get clarity from the regulators, but once we do, I would expect them to raise the dividend fairly materially and start to buy back stock more aggressively as well.
David, what do you make of the investment banking unit?
Revenues were down, primarily due to principal trading, and I think that was what most were expecting. I think Q1 was abnormally strong, but I think the iBank generally performed well. They continue to take share and sit atop many of the league tables in both equities and fixed income. Okay,
and before I leave you, does it make any difference to you if JPMorgan waits until next year to raise that dividend?
No, I think it's a timing issue. We're already in the month of July, so if it's 3 months or 6 months, I'm not sure it really matters. But I do think you'll get a meaningful dividend hike relatively soon. Okay, and anything else you're listening for in this call that's going on? Some additional clarity on financial regulatory reform and any kind of financial impact that's going to have. I think management may comment on that, but I think that's really incrementally what we'd love to hear from the company.
David, appreciate you joining us. David George there from Robert W. Baird and Company on the phone about JPMorgan.